So after the short break, we are back at our annual conference of the German Insurance Industry Association. It's now a great pleasure and a great honor to welcome on the screen live from Brussels the EU Commissioner McGuinness. She is Commissioner for Financial Stability, Financial Services and the Capital Markets Union. We are indeed very pleased, Commissioner, that you can make it today. It's a busy day in Brussels. You have been very active already. We have seen what you have published today on sustainability. I assume you will allude to that topic in your speech. So it's the first time, to our knowledge, that you address the German insurance community. We, of course, would have very much welcomed you here in person in Berlin. Due to the pandemic, this is not possible. But we are very pleased that you could make it on such a hectic day in Brussels. The common market, EU regulation, that is all key to our industry. And I will not further steal any of your time. We are very curious now what you will present to us, Commissioner. Again, a big thanks from Berlin.
Well, thank you, and thank you from Berlin. And let's hope that at some time I can join you in Berlin. It would be a great honor, as it is indeed to join you this afternoon in a virtual sense. I've always believed, I come from a political background, that in order to make good policy, we have to understand what is happening at ground level. So it's a real pleasure to be able to present to you today, but also to answer questions and hear comments from you and your colleagues, because the insurance sector is a very important part of the overall orientation towards a more sustainable European economy and indeed a more resilient economy. So very much appreciate the opportunity to share some thoughts with you. It is an opportunity for us both to listen and to learn. So let me start really perhaps in the broadest context. Looking at the COVID-19 crisis and realizing that we are in a very much changed world because of the pandemic. I mean, 1 year ago or longer, we had not predicted that we would continue to be constrained by a virus. And if it teaches us anything, it is that we had better prepare for something like this in future, because we were not prepared for it when it did strike in March of last year. And I think this is a wake-up call for all of us. Europe is making huge efforts, unprecedented efforts, to tackle both the social and economic effects of the crisis. It's also quite interesting to note that when it came to public health, this is a member state competence. And indeed, in many member states, a great deal of more public money is going into the health systems because of underinvestment in the past. And there is also realization that we need more European engagement in public health, because viruses don't stop at national borders. In fact, they do everything to cross border and do damage. So I think we've learned a great deal, and we should keep these lessons in our minds so that we are prepared for a future where this could happen again. I'm very conscious that the role played by insurers in the context of COVID-19 has been widely debated. And particular, as you will know, this area of business interruption. The pandemic has underlined the need for clearer information on insurance coverage and exclusion for policyholders. And this is an issue that I'm very much committed to examining further in cooperation with EIOPA. I'm also keen to explore ways to better support both citizens and businesses, including the insurance sector, if we face these similar dilemmas and problems in the future. And I think this is our biggest challenge. If we look to the recovery, and we are all talking about the recovery, it gives us an opportunity to build a better Europe. And I think we have to build a more sustainable and resilient Europe. And therefore, we need bold action to tackle climate change and to transition to carbon neutrality. And a very large part of the recovery plans for Europe will go to sustainable projects. It makes absolute sense that that is the direction of travel, and that is where our money should go. But I think we both know that public money will not be enough to meet our ambitious climate targets, and therefore we need to mobilize private investment. I know there is strong interest in the insurance industry to invest in our green transition, but many investors are looking for clarity on how to identify sustainable investment. And you mentioned that today is a busy day in the college, particularly after our meeting this morning where we unveiled our package around sustainable investments. And I think it is a groundbreaking moment that will really come to fruition over time. We adopted today the first set of technical screening criteria for our EU taxonomy, which is, if you like, a classification of sustainable investments. Sustainable economic activity are identified in a very granular way. And this taxonomy will give a common definition and therefore common language so that industry and investors can speak in this language and that money can flow towards more sustainable projects. And this is the objective. So our first set of criteria is around climate, both mitigation and adoption. And your sector, the insurance sector, is covered by this first taxonomy. And the criteria acknowledge the role that non-life insurers and reinsurers can play in enabling adaptation by their clients. We will complement the taxonomy criteria with disclosure requirements on companies seeking investment. And this again will enable investors to make informed investment decisions. So to that end, we have adopted a legislative proposal for a sustainability corporate reporting directive. Now, your colleagues might be more familiar with the non-financial reporting directive. So this corporate reporting directive will replace the non-financial reporting directive. And the objective here is that we have a clarity around what companies need to report. And if you like, we try and tidy up the current fragmented state of reporting in this area of sustainability. You know, we have very ambitious climate targets here at the EU level, climate neutrality by 2050. And even, this morning, the Parliament and the Council agreed on ambitious targets for 2030. And, these are set in stone and we have to work towards meeting them using finance as an enabler of change. And I suppose it's against this background that we are preparing a wider, renewed sustainable finance strategy. And one of the key areas for this strategy will be inclusive transition finance. And this really means that we try and help companies improve their environmental performance and move towards sustainability. And we also will look at how to manage climate and environmental risks by the financial system. And the insurance sector, in my view, will play a key role here. So there is a lot happening today. And I think that when we look at the details, they, if you like, form part of the overall jigsaw. They come together in a very concrete way. And this is also an important part of the upcoming review of the Solvency II directive. And here we want to strengthen the integration of climate and environmental risks in the framework. And, in many ways, the insurance industry is the barometer of climate change in a very practical way. We have seen areas in member states and globally that are subject to very severe weather effects driven by climate change, and this impacts on the whole insurance sector. So I think you are already aware and fully, if you like, in tune with the impacts of climate. I want to speak perhaps in a little bit more detail on the actual review of Solvency II. As you know, the framework has been in place since 2016. And I'm glad to hear that many stakeholders regard it as a success story and a leading example at global level. But I think we shouldn't be complacent. The economic environment has changed, and the review should make sure that our framework is fit for purpose and fit for the future. I want to stress that we don't have any final conclusions drawn yet, but I want to present you with the likely direction of travel. And I'll do that in 4 main themes, though, of course, this is subject to the Commission's final decision over the coming months. So let me start with the role of the insurance industry in the Capital Markets Union. Again, post-COVID, we want to finance the economic recovery and long-term sustainable growth. And that's why we have to build up the Capital Markets Union. To allow our businesses to flourish in the recovery and beyond, they need to access a wide range of funding sources and not just be reliant on bank loans. Businesses have built up more debt during the pandemic, so we will pay particular attention to insurers' equity investments. Insurers are important institutional investors in the European Union and so are crucial to an effective capital markets union. We want the sector to meet its full potential, including with regard to equity and long-term investments. The Solvency II review gives us a chance to make sure that we have the right rules in place to incentivize the insurance industry to engage in capital markets. Let me move secondly to proportionality. Solvency II is a highly sophisticated and risk-sensitive framework, but it can sometimes be complicated to understand and indeed implement. Now, I believe we should maintain the core principles of Solvency II, but we can acknowledge that it could be better adapted to the needs of smaller or less risky insurers. So proportionality is an overarching principle of the Solvency II framework, but several groups feel that it does not work as well as it could. So this should be one of the themes that we address in our Solvency II review, the issue of proportionality. Based on EIOPA's advice, we should better identify what kind of small firms could be excluded from Solvency II. And beyond exclusions, we want to remove potentially unjustified administrative burdens and compliance costs for firms that are subject to the Solvency II rules. So again, we will look at how to identify less risky firms, and this could provide more legal certainty on when companies can benefit from simplified or adapted requirements. Let me now move to the very core of Solvency II, namely its risk sensitivity and market-based valuation. We need to uphold these strengths. We are looking at EIOPA's proposals on interest rate risk and the extrapolation of regulatory interest rates. I note the concerns that these proposals could tie up a lot of capital and may affect the ability of insurers to contribute financing to the real economy and offer quality products. EIOPA acknowledged the impact of its proposals and suggested limiting the effect during a transition phase. The Commission will have to make up its own mind in this regard. Beyond the potentially costly elements of the review, there are several areas where it may be appropriate to create relief for the industry and address the issue of volatility. In particular, we're considering how to make the volatility adjustment more effective. The volatility adjustment aims to mitigate excessive short-term volatility in financial markets. The measure already demonstrated its power to impact insurers' capital position during spring of last year. However, the tool currently seems too blunt. Some insurers received too much compensation and others too little for turmoil in financial markets. If we find a way to address the root causes of overcompensation, it may also be reasonable to allow the measure to offer higher compensation on average. Now, last but not least, let me say a word about policyholder protection. Solvency II has facilitated the integration of the single market for insurance services by improving the level playing field and supervisory convergence. And this is really positive and important. This is essential if we want to allow our citizens to benefit fully from the single market. I am mindful, though, of a number of cases of cross-border failures that cast doubt on the effectiveness of policyholder protection. We may need to address these issues and consider, where necessary, enhancements in insurance supervision in the European Union, including on cross-border business and group supervision. And finally, we also are exploring whether to introduce a framework for recovery and resolution of insurers and insurance guarantee schemes. In my discussion on these four key themes, I hope I've been clear that the Solvency II review presents an opportunity to improve the framework rather than to completely overhaul it. We will pay careful attention to the overall impact of the review on solvency requirements and obligations imposed on insurers. We will have to make sure the overall impact is not unduly burdensome and doesn't prevent European firms from contributing to our priorities. I would like to thank you as a representative of the German insurance industry for participating in EIOPA's impact studies. They also inform the Commission's work, and I hope that our proposal will be unveiled before the end of the summer. So let me conclude by thanking you again for this opportunity to talk to you on what has been quite a a breakthrough moment here at Commission level with our sustainable finance package. In my view, the Solvency II framework should continue to be a gold standard for the way it protects policyholders and maintains financial stability. And it will continue to be a framework that is suitable for the German insurance industry. I'm also convinced that the insurance industry has a vital role to play in some of our flagship EU initiatives. You can help us support the economic recovery, develop our capital markets union, and assist the transition to a sustainable economy. Thank you for your attention, and I now very much look forward to both your comments and your questions.
Commissioner, thank you very much for your impressive speech. You alluded to your sustainability agenda. You alluded to the Solvency II review, which is a key project, of course, for us as an insurance industry. Let me start with the topic of sustainability. We very much support your sustainability agenda. We have just spent an hour dealing with the topics here in Berlin, since we have adopted our own sustainability position as a sector just in January of this year. But sustainability is not only a European issue, it's a global one. So what are the measures or action that the Commission undertakes in order to achieve progress globally? How do you make sure that the European way is successful at the end of the day?
Look, I think it's good that we're starting globally. And I suppose what I would like to really impress is that Europe has been working globally. We set up the International Platform on Sustainable Finance in October of 2019, and that already brings together 17 countries across the whole spectrum of development. And these countries represent half of global emissions, global GDP, and global population. So while we're working at the European level, we have also been extremely active at the global level. And the entire reason behind us working globally is to help scale up this mobilization of private capital towards sustainability. And we want that to happen at the European level, but frankly, we need it to happen at the global level, because all the efforts we make at EU level will not be sufficient if the rest of the world is not moving in this direction. So I think it's hugely important to understand that Europe is working globally, but also working within our own legal framework and within the, if you like, targets and ambitions we have set towards climate neutrality. And to give you more detail of what's happening at the international level, there are working groups on green taxonomies, and we already have our own European delivery today. And those are being led both by the EU and China. We have working groups on sustainability related disclosures. And here again, Europe, Japan and Switzerland are engaged. And these groups allow members to deepen the level of cooperation and look at one another's strategies and see, can we learn from each other? And those working groups will publish findings later this year. And to some extent, how I summarize what we're doing is that Europe is not ignoring the global. In fact, we will ensure that when it comes to the corporate reporting around sustainability, we will work with global standards and make them adaptable for the European theme, if you like, and for the European situation. So we are extremely committed to working with our global partners, whether it's at the G20 level on Sustainable Finance Working Group and the G7 finance track. And I think, you know, on a very optimistic note, given that the US is now back at the table, and China is engaging, Europe has been already leading, I think the world is in a much better place than we were 1 year ago to advance our work around sustainability. I would also say that, you know, this is not an easy task. In a sense, we are trying to reshape our society and our economy, and we have a set timeline within which to do that. So I say to our global partners that Europe, because of our ambitions, we already move, if you like, further and faster than the global level. But in a sense, also by giving that leadership, we are setting the rules and we are encouraging that the global standard comes towards us. So when you ask me, how can we be sure that the European way is successful at the end of the day, our success will be measured by the global engagement. And I think that today was a particularly important day where the world saw the EU in action. We've all been using all of the nice words and, trying to, if you like, encourage this to happen. Today, the taxonomy outlines how it can happen in a whole range of sectors. And therefore, we move beyond these fine words into action. And I believe that failure is not an option here because there is too much at stake. And maybe the experience of the pandemic, where we were all found wanting, even though we are developed economies and societies, we were, if you like, stopped in our tracks by a virus. And we should perhaps react in the same way as we've done with the virus as we need to do with climate. We react immediately and urgently, and we change our ways, and we do it towards sustainability. So when you ask me, will we succeed? I think failure is not an option. And I am very heartened, given what we've done today, that we can and have to be successful, and that we will continue to play our part as global leaders as global leaders in a challenge that is global.
Mairead, you just alluded to the pandemic, and the ongoing pandemic has shown many vulnerabilities, but it also has accelerated certain developments such as digitization. Your Directorate General works on its digital finance agenda. Can you outline your priorities briefly to us?
Sure. Well, look, I think what's really important to say is that digitalization is now very visible to us because of the pandemic advancing, if you like, rapid change. What's also important is that the Commission was already looking at this area. So we weren't waiting for the crisis. We were, if you like, working on our proposals. And in September, we adopted our digital finance strategy, basically to support the digital transformation of finance. And I think at the heart of this, our citizens. We want to make sure that this transformation works for citizens, works for business, that we look at the opportunities, but we also mitigate the challenges or risks that may be inherent in this digital world that we are now moving towards. And we've identified 4 priorities to guide our actions on promoting digital transformation. So we need to address the obstacles in the digital single market for financial services. Secondly, we want to ensure that our regulatory framework facilitates this digital innovation in the interests of consumers and indeed market efficiency. So we put forward a legislative proposal on markets in crypto assets, this MiCA proposal. Thirdly, we want to promote data-driven innovation, building on the Commission's new data strategy for Europe. And we want to set up a common financial, if you like, information or data space. We're building a common financial data space. This is important also for the insurance sector. And EIOPA is conducting a public consultation on both the opportunities and challenges of this open insurance, the sharing, if you like, of insurance-related data. And I really would encourage all of those who are interested to contribute before our consultation closes on the 28th of April. And the 4th area is digital transformation of the financial system, if you like, with this idea of the challenges and risks in particular around cybersecurity and the protection of data. And there we presented a new proposal on operational resilience, the DORA package, and together with the new strategy for financial institutions, really to make sure that we are resilient against cyber attacks. And this is an area where we see vulnerabilities, and it is an area where we need to increase our resilience. And it is a challenge that we are ready to address. We've also recently asked advice from the European supervisory authorities on how to make sure that our rules are fit for purpose and that supervisors have all the necessary tools needed to protect Europeans against risks and also to maintain financial stability. And this is something that I'm really looking forward to seeing the results of. And frankly, just to summarize, the pace of change in the digital world, is by its very nature quite dramatic. COVID has accelerated that. So we're much further down the line here. It is changing the world of finance. It is creating huge opportunities, but also raising lots of questions. And I think that what we are exploring and what we've done already is to address some of those questions without, if you like, choking or preventing innovation and opportunity. So in all of these things, we look both to the opportunities, but equally we measure the risks. And I think that is really a proportionate way to respond. So again, like sustainability, we find that the work here in the financial area is to make the European financial system resilient in this new digital era. And I think that it is hugely important. There is a generation who have not, if you like, worked in the traditional way by over-the-counter services. They're using, as I have 4 adult children, I know of this, they're using apps. And therefore, the engagement is different. And we have to ask ourselves, are the risks, are the opportunities different? So we are very, very much aware of this. And I'm only in this role 7 months, so I can't take credit for the work that preceded that has resulted in both the MICA and DORA proposals. But I am very determined now to move forward so that we get the best results from what is on the table. And again, I am proud to say that a lot of this work is groundbreaking, and at the global level is something that our other stakeholders globally are looking at. So we are in a good place, and I think we just have to stay alert and work hard to mitigate risks, but also seize opportunities.
Commissioner, I really want to thank you for sharing your thoughts with us. That has been impressive. There is many food for thought that we take home for our future discussions. I really want to warmly thank you for taking so much time to be with us today. I want to thank DG FISMA under Sean Berrigan for the ongoing fruitful dialogue. So thank you very much from Berlin to Brussels. Stay healthy. Hope to see you soon. Thank you very much, Mairead. It has been a real pleasure.
My good wishes to you too, and to all of your colleagues. Guten Abend, and stay healthy.
Thanks a lot.
Wiedersehen.